What's going on, guys? Philip at Trade Genius. All right, we got a lot to cover. Bitcoin's made a decent pullback, so we're going to talk about this. We've been talking about the current parabolic structure of Bitcoin and potentially hitting that 30,000 area. So we're going to talk about if that's still in play here because of this large pullback that we're in. So we'll take a look at that. We'll take a look at the daily, the weekly, the monthly, and also because June 30th closes out the quarter, we'll take a look at our quarterly chart as well and see how that all looks. We'll also go and revisit our parabolic chart and see how this market structure is falling into place with that structure. And we'll take a look at our fib multiplier chart. This is important for cyclical tops, so we'll see how we're doing there and talk about that a little bit. We're also going to take a look at our CME contract expiration chart and see how the market cycle is playing into that. We'll also take a look at the crypto fear and greed chart. I think we have a measurable level now that we can take some action off of in the future. We're also going to look at market internals, and one thing we're going to focus on is the Bitfinex short exposure. We'll talk about how that affects things. We'll also take a look at our Tether cap chart and see what clues that's giving us. Another metric we're going to look at too, guys, is GBTC premium. I'll explain that later in the video. And we'll also take a look at the Chinese yuan and see how that devaluation process due to the trade wars is affecting things. All right, guys, let's dive into this video and check this all out.
Trade Genius.
All right, guys, let's take a look at our quarterly chart. So this current bar is our current, we're in the July now, new quarter, but this last bar was our close on June 30th. So a huge quarterly candle, and very important technically because it closed above these prior highs. So we wanted to see the quarter close above 99.53, and we got to close at 10,748. So very impressive close there. When we get a quarterly bar like this, as you'll notice in the brief history of Bitcoin, there's always follow through when you have a quarter of size like that. So it's improbable that this is just going to reverse back down, improbable that some of these calls for even lower lows that this bear market's not over is just not really in line with the historical moves that we see, nor is it in line with where we are in the current cycle. So very impressive quarterly candle, and I think we see some follow through to the upside in the coming months. All right, let's take a look at the monthly chart. All right, guys, so this is the monthly chart, and we have a nice move up. Historically, that's seen a lot of that type of move. We'll see a lot of more follow through as we saw with the quarterly chart. One thing of note here, we did not close above these highs here. So we had a high of 11,769 and a high of 11,660 on these monthly bars. And we had what we call a swing failure, where you break the new highs, but you fail to close above them. So that particular move there is interpreted as bearish, but again, with the power of this move, we have increasing volume on the last 3 months. I think this next monthly candle will be important, and I am keying in on that level. That's the level we talked about. That was a key weekly failure on this bear market. We did shoot an overthrow way over it and blew out any resistance there, but has since closed under it. So this next move up, and we'll talk about that a little bit more in this video, I think will be important as we clear back over these that 11,700 area. All right, let's take a look at the weekly chart, and we're going to flip over to our Coinbase chart. All right, guys, weekly chart. First thing that jumps out is this candle. That's a very bearish candle when you have just basically a huge rechase of the whole candle move, and it was a large move. I mean, the low on this was 10,300 and the high was 13,800. So that's about a $3,500 candle, weekly candle, just shy of 14,000, and retraces. At some point during the week, this looked like it was going to have a decent close, but ultimately it faded off toward the end of the week, and that was that. So now, that being said, I don't think that this move is done. I think what this is going to call for is a bit of consolidation on the daily before we start seeing a resumption to the upside. So on the weekly chart, again, we did not get a close above this area here. Okay, remember we talked about this key area of around 11,700 or so, and so far we failed to swing over that. So that's going to be key as we make another attempt, which I'm expecting that we do, and key in on that level there. All right, let's take a look at the daily chart. Now on the daily, as we saw with the weekly, we do have this fib level here, right? So we moved into that. The 618 level was 13,488. We penetrated that and rolled over. So now I want to talk about the moving averages. We talk about these moving averages, and essentially that kind of gauges, where you are in the move. The faster WMA, weighted moving average 20, is when you got good momentum. You usually see a pullback to it once and then a bounce. So those are always juicy on the first pullback. We do expect that moving average to fail though at some point in the move, which we got here. And then we start keying in on this lower level toward the slower moving average, which is currently at about $9,200. Doesn't always have to touch it, but we do expect to move back to it. So now that that has happened, we generally expect to see another bounce higher. If we were in a solid trend, we should clear the current fib area that we would draw on this chart now from high to low. So we can actually do that here. So we'll go from high to low. So what we're looking for is if we get a bounce going here, these are your levels that we're going to be seeing to the upside now that are going to be areas of resistance, starting with the 382 at 11,267 approximately, and then the 50 area at 11,760. Your 618 at 12,257, and your 0.705, which sometimes they call that the optimal trade entry, at 12,624. So I think those levels there on the way up are going to be areas expect to see some resistance as we get back into this zone on the way up. But I do think that probably a high likelihood that this move down here, this low of 96.51, I think has a good chance of holding this. This was just a tad over 30% pullback. And that goes in line with what we've talked about, where most people are expecting that 30 to 40%, and we should probably think about only getting 20 to 30% pullback. So we've achieved that if we are going to see smaller pullbacks, and we should see that bottom hold and this thing move higher. All right, let's take a look at the parabolic update. So again, we talked about we have the different bases, and we're basically looking to see what happens with base 4. Most of these moves after a base has formed has been pushing the 2.618 level, which was currently at 15,867. Okay, that didn't happen here. We've pulled back. I suspect now we're going to see consolidation in this range as we kind of munch on those levels we just talked about, and then we'll probably see some pullbacks from those levels, and then regroup and go higher. So I think base 4 is definitely underway, and then at that point we'd be looking at this next move should be fairly explosive out of that. But we could get a move up and then another fifth base of consolidation. That is possible as well. However, time-wise, I think this is going to probably climax before the Litecoin halving in August. So I'm thinking that July we should see some fireworks and ultimately the top of this cycle. All right, let's take a look at the fib multiplier. All right, so this is the golden multiplier on the fib levels based on the 50-period weekly moving average, which is a key weekly moving average when it comes to the end of bear markets. And typically, we've seen our cycles out of bear markets end on this fib 2 level. And we've overshot that, which is a little unusual for these cycles coming out of the bear market. Actually, it's been extremely strong out of that. Notice we came up to it initially and we stalled out around 11,239. And historically with these cycles, that's been the top and then it rests after that. So now we've got a pullback, and these daily bars don't update until later in the day. So we'll see a low now of about 9,600 down to here. So I think for the bulls, another key level to be looking at is getting back over this fib 2. Typically, when you break these levels, they will pull back, but once they're broken, it kind of opens up like a gateway to the next higher level, which currently is at 17,229. One scenario I'm thinking about is we could base there for fifth base in the parabolic structure before ultimately jettisoning up to those higher valuations, breaking all-time highs. All right, now let's take a look at the Bitfinex shorts. All right, let's take a look at the market internals here. Now, again, this chart up, I have the Bitfinex longs. This is the amount of people that are long, and also Bitfinex shorts, the amount of people that are short. And this up here is the Bitfinex funding rate. So if like when it's higher like this, that means that the long side of the trade is crowded, and that's bearish, and vice versa. If you see these bars to the negative side, it can be interpreted as bullish. So we like to keep an eye on that. But what I want to point out to you guys is the Bitfinex. Whenever we see a large decrease in the amount of short exposure on Bitfinex, it's always bearish. Okay, so when that happens, expect to see more downside. So if you're into shorting Bitcoin, you can take a short position, or if you're long, you might want to tighten up your stops or exit. But usually what happens is that reduces the amount of fuel for a short squeeze. So short squeezes will see these kinds of, that's fuel for moving up. People are closing out their short positions, have to buy back, and it creates more of a bullish move. So when you remove a lot of the short exposure, that eliminates a lot of the potential move to the upside due to shorts closing out the positions. There's just a lot less fuel for a short squeeze. And looking back historically, you would see that whenever you see a large drop off, and this does happen periodically, it's followed by a pretty decent fall off in Bitcoin price. So we saw that earlier in the week, pointed that out in the room. And that was fine because at that point we were out of our long trade and we're looking to buy a pullback. So I think this part of it is done and played out. Now the longs still are increasing their exposure, but we also do have, if we were to zoom in, we'd see that the shorts are increasing a bit here on theirs as well. So kind of negates each other right now, but that, as far as the effect of that, the shorts dropping off, I think that's over. And now we're going to start looking at buying dips because potentially we can now have this correction over and resumption of our overall move up. All right, let's take a look at the crypto fear and greed indicator. Now, we got a 63, not very high, but what I want to show you guys is that we did peak out at 95 and then we dropped, and that was off of the high. So I think this is a good, again, we were waiting to see this. This is a good indication now of what's toppy in this market. So north of 90, I think that's when you need to start looking at possibly getting short or exiting your long positions. But this was great. This is what we wanted to see. And so I think this has a nice expectation now for when we're in a bullish cycle. Because remember, this chart was only in existence during the bear market. So now we've got a high water mark for the bull market and we peaked out at 95. So now we're going to be taking a look at all readings north of 90 as a potential area to take profit or flip short. All right, let's take a look at the Tether cap. All right, guys, so we've been talking about this for the last couple of weeks, and what we've seen is Tether is still climbing, and actually we've seen more Tether inflows. It does take a little while for Tether to soak into the market, so again, we look at this like money that's queued up waiting to go to work, and we're not seeing a decline in that at all. One thing we talked about was potentially that the Chinese, it's a lot easier for them to get some Tether and move Tether out of the country. I think that's a decent chunk of what we're seeing in the Tether action, people converting their Chinese yuan to Tether and then getting it out of the country, hedging against the devaluation tactics that are going on because of the trade war talks currently in session with the US. So we've got our 30% pullback, but we don't see that in Tether. So I think that gives you confidence that you can buy the dip on this move. And again, we get back into the parabolic cycle. Another thing we want to look at is our CME gap chart. All right, guys, so this is the daily chart. Again, I think gaps on the daily are a bit more powerful. We closed this gap in fairly short order, so that's gone. We closed this gap today, so that's gone. We have one more gap left. That's this 85.15 gap. However, gaps there's no law that says gaps have to close. They're just kind of a powerful force. When you start getting into the vicinity of them, people start looking at that as a target. And that's just been the nature with the markets and their relationship with futures markets. So at some point, maybe later after we finish our move up and there's a larger consolidation and move down, we might see that. Or it just could be an abandoned gap and we never do see it filled. Just, you have to temper that with all the gaps on the CME daily have filled. If we drill down to the 240, the 4-hour chart, you will notice that we do have a gap open at 12,060. So again, another area where we might see some resistance, but I think that this is probably going to close sometime this week is my guess. Right now we have a decent reversal going on. Another metric I want to take a look at, guys, is the GBTC premium. So GBTC is a way for you, it's an over-the-counter stock basically that holds Bitcoin, but you're buying it at a premium. And this is the GBTC premium chart. And so generally speaking, when you've got premium spiking up, that means a lot of people are buying in, the FOMO is up, and that can potentially tell you when's a good time to exit the market. So this was our current top at the height of the market. So we had a reading of 45.85. So you can kind of interpret that similar to like the crypto fear and greed. This would be almost like your FOMO gauge, because again, as they're buying into GBTC, the premium goes up. So you had a 45% premium on the underlying Bitcoin asset that they own. So 0% premium would be basically one-to-one correlation. You're buying spot Bitcoin at spot price. But on this fund, you're paying 45% more to get that. Currently, we're sitting at 38.84 on the last close of July 1st. But I think if we look at our premium, current premium, yeah, it's down to just under 30%. So it's cooled off. Now, considering the levels that Bitcoin is at and the premiums this low, historically, the premiums have been higher. And so it tells me that there's not actually as much retail action FOMOing in on this move. So that's something interesting to note. I think this next move that we see, which is we're in the beginnings of, will be known as the institutional phase of Bitcoin. And that's where I think you won't see the kind of collapses in prices that we've seen in the past where it was largely retail driven. Okay, last thing we're going to take a look at is a comparison to the Chinese yuan. So the yuan was chopping sideways here for a bit, and so was Bitcoin in a fairly decent sized range. And then the yuan value dropped off substantially, and Bitcoin just shrugged that off and then continued to move higher. The yuan at that point started to move higher as well. And basically what this means is it doesn't mean the yuan is growing in strength. That means that the US dollar is growing in strength. So as this goes up, yuan is devaluing. So if the yuan devalues, that potentially may cause more outflows of yuan into, say, Tether and hedging the devaluation of their currency. So now we've seen actually a move up prior to the bottom that we've just put in currently down at 9,651. So we see the yuan moving up as well. Even though we kind of diverged here with price, notice that it started another decent leg down, and Bitcoin started to follow that move down. But now I'm keying in on this move up. But I think there's enough clues here, guys, to say that this move is probably close to over, if not over, as of today. And I think we can switch to looking to buy some dips and start attacking these levels that we talked about earlier, retracing some of these fib zones. So obviously we've got a volume node here. I think for this week, getting back and attacking the 11,000 level will be important. And so keep an eye on that. But again, in the room, we'll be looking to buy the dips. If you're interested in joining us, head over to tradelikeagenius.com. All right, guys, well, that's basically it for this week's review. I know there's a lot of info there, but I think in summary, we've had a nice correction. I think it falls in line with the smaller correction range of 20 to 30% that we've been looking at. And now we've hit levels that I think make sense where we can start bouncing from. And then some of our leading indicators in the past, such as the yuan devaluation and the Tether printing, I think both show that this isn't over as far as the upside is concerned. So I do expect now that we've pulled back to these levels that we start climbing back higher. All right, guys, thanks for watching. Please hit like and subscribe, and I will see you on the next video. Take care.
Trade Genius.